Welcome to The Spread. I'm Matt Raebel. This week, one company's stocks skyrocketed due to the coordinated trading of retail investors, and for once, I'm not talking about Tesla. Momentum trading is when investors buy stocks whose prices are actively rising and then sell them when they think that those stocks have peaked. This is what happened with Tesla stock more often than not last year. The most recent case of runaway momentum trading is GameStop, a large entertainment retailer that makes most of its money selling used video games and pre-orders for upcoming games. This week, users in investment communities on Reddit like WallStreetBets bought shares and tons of options on GameStop and other struggling companies, causing those companies' stock value to skyrocket and post year-to-date gains exceeding more than 1,700% in GameStop's case at least. This resulted in market volatility that caused major losses across the board for a lot of hedge funds who had been short sellers on those stocks. The flood of orders triggered 44 circuit breaker halts on Wednesday morning, and things got so crazy that on Thursday, Robinhood temporarily blocked its retail customers from trading certain securities, including GameStop, and also raised margin requirements for those securities. Later that day, a class action lawsuit was filed against Robinhood for restricting trading by some of its users for depriving them of investing in the open market in the midst of an unprecedented stock rise. This was the biggest story of the week for a lot of reasons. From a regulatory perspective, for example, it poses interesting questions like, should securities regulators step in when stocks like GameStop inflate to potentially problematic levels? The long and short of it is, events like this make a lot of waves and rocky markets. A little volatility is good now and then, but this is a horse, or should I say bull, of a different color. As exciting, horrifying, hilarious, whatever your reaction to this story was, it wasn't the only important story to come out of the options trading world this week. On January 27th, the EU released a statement declaring a recognition of equivalence for US CCPs, that's central counterparty clearinghouses. Basically, this means that clearinghouses on Wall Street and throughout the US will be able to operate throughout the EU. Good news for the US and the EU. As for the UK, whose clearinghouses are only approved to operate in the EU until June of next year, not so much. That's it for The Spread this week. We've published new content on johnlothiannews.com, including new articles by Tom Thompson and Suzanne Cosgrove, as well as a new edition of our Open Outcry Traders History Project. So check out our site for all of those and more. Until next time, stay safe and happy trading.